Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better understand what we see in the global landscape. Basically we're seeing many of the indices around the world, primarily in the U.S., though, hitting new highs as of Friday. One of the things that we've talked about at Resney Wealth Management is bringing you maybe 2 video updates a week, which we're going to start doing this week, and that's why we're talking on Monday. We saw the new highs being hit in the U.S., of course, on Friday. We continue to see relative strength a lot in the mid-cap in the U.S. In fact, I've talked about this throughout not only this year, but towards the end of 2012. We run a strict strategy off relative strength and proprietary system. That proprietary system basically exited us out of gold, or had us sell gold because it started to become relatively weak, and replaced our position in gold with basically the IJH, which is the mid-cap in the U.S. What's interesting is gold year-to-date as of Friday was down 24%. Now, while I don't like to use my crystal ball and make predictions on what an asset class is going to do going forward, my gut reaction is, just from statistical numbers, managing money for 27 years, gold will probably end the year even lower than it is today, simply because it's down year-to-date a lot. You have people who didn't sell when they should have back in December and January of, in the last year. And essentially they're going to sell it probably towards the end of the year here in order to take a tax loss. This often takes asset categories like gold or any investment down even further as you get into the latter parts of December, and maybe a possible short rebound in January. But at the end of the day, gold is relatively weak, and we see it getting weaker. We also talked about commodity-based indexes, which we, of course, do not own, and they've been weak all year. We continue to have preference towards, of course, the small and mid-cap in the U.S., which have been relatively stronger, even more so than large cap. We added some emerging market exposure, approximately 8 weeks ago, and it's doing fine. No asset category goes straight up and no asset category goes straight down. I firmly believe investors, unfortunately, misbelieve the risk of different asset categories. And one of the areas we continue to see this year, as we get inflows of new clients at Resney Wealth Management, is people who are overweighted substantially in bond and bond mutual funds. This is, of course, has been fairly devastating for these individuals, but again, I firmly believe over the next 3 to 5 and possibly over the next decade, investors who overweight their portfolio in traditional bond and bond mutual funds are going to be recipients of major losses and mediocre returns at best. Ultimately, when rates go up, bond values go down. We run our strategy off relative strength, and our strategy is telling us now avoid intermediate and long-term bonds altogether. Of course, we've done that for the majority of this year at Resney Wealth Management, but we see really more pain to come for those investors who keep overloading the boat on the asset category that they falsely believe is really safe. All assets, all categories can go up and down, and some can go down just as much as the equity market, but unfortunately, investors sometimes fail to realize that investments can go up and they can go down, and even though you perceive a bond to be safe and secure, they can go down 30, 40, even 50+%, depending what interest rates do. The economy in the U.S., it's getting a little better. The economy in Europe, at least some of the numbers that came out last week, were a tad bit light. And again, they're doing stimulus and doing things in Europe to get their economy moving along. Of course, emerging markets, the big news as of Friday is major reform in China. So I think that's going to bode well for all of the emerging markets in general. Some will do better than others, but generally speaking, China is the big emerging market economy in the emerging market sectors. And we do have a helping of emerging markets in our portfolio. And actually, over the last couple of days, it's done quite well. I would continue to see strength in emerging markets, hopefully, as we continue through the end of this year, simply because of this news from China now. They're actually going to lift the one baby per family quota, essentially, and maybe go to 2. That's a huge positive for their economy and the world growth potential. They're also going to have 15 individual sectors that they're going to target to help improve their economy growing. This is an ultimate positive, not only for China, but ultimately for the rest of the world. Because you got to remember, China is the second largest population in the world. And you've got billions of people there that can really push that needle. Of course, if you're a client of Resnick Wealth Management and you have a question about your portfolio, please call our office. If you're not a client of Resnick Wealth Management, I would encourage you to call our office for a consultation. We always like taking on new clients who are nice people to do business with. Make sure you listen to my live TV show that I'll have this Wednesday in Southwest Florida. Of course, that will be uploaded the next morning if you're not in the viewing area. Another announcement, we have upgraded our website completely at Resnick Wealth Management. We have our Resnick Wealth Report newsletter that is now only available on our website. You can go there, hit the resource tab, click on Resnick Wealth Report. Once you click on that tab, and you can sign up. All you have to do is input your email address and you'll get updates via instant every time we add an article to our newsletter. So the way to get that in the future is going to be by signing up yourself through our website. We're trying to streamline a few things at Resnick Wealth Management. A couple other important notes that I want to put in. We are expanding our staff at Resnick Wealth Management, and we're expanding our office size. In fact, our office in Naperville will be moving shortly. We'll be making an official announcement to clients. So the current office stands, but within the next 2 to 3 weeks we anticipate we will be moving to larger facilities to better obviously handle our clients in the Illinois region. Also, we are hiring employees right now at Resnick Wealth Management. We're looking for some media individuals, we're looking for research people, and we're looking for advisors. So if you know anybody that is interested in learning about the investment management business, maybe they're in media and video, and that's one area that we're trying to improve upon, and also research, tell them to send us their resume to Brian Resnick at ResnickWealth.com. Again, if you have a question or your client, call our office. If you're not a client, I encourage you to call our office to schedule a consultation. Make sure you have yourself a safe and profitable week.